Hey guys, what's up, how's it going? My name is Rob and welcome back once again for another video on the channel. In today's video, I'm going to be giving you guys an update on my dividend-based, my Canadian dividend-based portfolio, as well as show you guys what stocks I'm going to be buying inside my portfolio today. So we have lots to talk about today, and going towards the end of the video, I'll show you guys some basic analysis because I've had a lot of new people on this channel. I've had a lot of people talk about and ask me, what do I look into a stock? Because we're all about the fundamentals and keeping things simple, in today's video I'm going to show you guys how I just do some pretty basic, simple research on the stocks that I'm buying. So once again, the first thing we're going to cover is the actual portfolio itself. I give you guys an update on the stocks are doing. I'll show you guys what stocks I'm buying, and then we'll go into what I actually look for when it comes to buying a stock. So before we jump in, like usual guys, if you guys enjoyed this video, please be sure to give it a big thumbs up and remember to subscribe to the channel if you guys want to follow alongside with me as I build out this dividend portfolio. And like usual guys, if you guys want to support the channel, there's affiliate links for wealth trading, everything in the description of this video if you guys want to get your referral income or use my referral ID for signing up with Wealth Trading. Alright guys, so really quickly here, we'll just do a quick little portfolio update on how the stocks are doing, how our portfolio has been growing, and it is early in the morning here. It is actually Thursday, the 18th of February. 10 a.m. in the morning, so the stock market just opened up. We're doing this video a little bit earlier than usual, just because I got to get it done and got some other stuff to do throughout the day. But here's a quick little recap here really quickly. So we have $20,000 inside the portfolio, and keep in mind guys, if you guys are brand new to the channel, we did grow this portfolio completely from scratch over the course of this channel. So in a lot of my older videos, I talked about the portfolio, and you don't need to watch them all to really get a sense of an idea of what I'm doing and whatnot. You can just watch the newer ones, but just understand that we really did build this portfolio from scratch, and this is kind of how we got to where it is today. So over the past day, which is just this morning, stocks are currently down about a little bit. It looks like we're down about $73, which ends up being I guess less than 0%. Over the past week, we are up $6, so not really much going on over the past week. Things kind of going up and down, up and down. Over the past month, we're up 1% of the portfolio, which is $232. And again, going over the past 3 months, whatnot, you can see like a lot of that growth still coming in from the end of last year and the beginning of 2021. We're up 5%, which is about $1,000. And then over the past year, we're up 8%, which is $1,400. And then all time in the stock portfolio, we're up around $1,500. It seems to be hovering around $1,500 for the past couple days or so. So not too shabby. Obviously, we started investing in 2020. Before the pandemic hit, we didn't have much money in the portfolio, but we did have a little bit, and then the pandemic happened, and then we just kept investing throughout the pandemic in good quality stocks, and this is kind of where we are today. Alright, so in today's video, we have $253 to trade inside the portfolio, and like usual guys, if you guys are brand new here, and I just like to say this every single time, and this is the strategy I use, is every single day whenever I buy stocks, I kind of look at, okay, what ETF can I buy to have like a safe idea of kind of buying the entire market and getting into the habit of just reminding myself at the end of the day, I want to buy into the market, I want to buy ETFs, I don't want to get too crazy with my individual stocks. So what I like to do every single day is I come in here, I look at my two ETFs I have VFV or VDY, and I usually buy a share or two of whatever one I kind of feel like doing. Today we're going to buy VFV, which is the S&P 500, so I'll buy one share of that, ends up being about roughly $100 Canadian. And the main reason why is just because VFV is a tremendously good growth fund. Over the past 5 years, it's up 87%. It also gives us great exposure to the US stock market. You can't really go wrong with that. And somebody mentioned in a video, VFV is traded in Canadian currency, so you don't get hit with currency fees. You don't get charged with dividend fees, so there's pretty much no fees for this fund. And the actual fees, like the MER fee, fees or the management fee for this fund is actually like almost like 0.07% or something non-existent. So really it is like, if you're going to buy US stocks for the S&P 500, I think VFV is one of the best funds to buy just because you get such good value and such good growth over the long term. Otherwise, we'll go back inside the portfolio here, and the stock I'm going to be buying today is one that actually held quite a bit inside the portfolio, and this is one that I bought way back in the day, and I kind of been slowly buying over the past couple years, I guess the past year or past couple months or so, and that's Algonquin Power and Utilities. And this is a really cool company. They're a utilities-based company out of Canada, obviously, and they're kind of like the Enbridge, so to speak, but there's a lot of things going for them that I think is a lot better than Enbridge and some of these other established power companies. But this one has been around for quite a while, and in today's video, because like I mentioned earlier, there's a lot of new people to the channel, I'm going to talk about like some of the things that I like about Algonquin Power and Utilities, and you can take this information, really apply this to any stock that you're researching. And keep in mind, we're focusing on long-term dividend-based, growth-based stocks that have the potential to grow lots in stock appreciation, but also have the potential to grow lots in terms of that dividend growth and whatnot, and increase those dividends over time. So that's the main focus here. So let's take a quick peek at Algonquin Power and Utilities, and let's kind of take a peek at some of the things I would look for if I were to buy the stock today, or any other stock for that matter. Alright guys, so really quickly here, once again, I just want to mention that this is one of the easiest ways to do stock analysis. I don't like to complicate things. I like to do keep things like very fundamentally beginner friendly, because I think when you overcomplicate things, a lot of times it's just not worth the effort, and you might just not want to. Maybe you have other things going on in your life and you just don't have all day to look at stocks or to kind of freak out about them when things aren't going your way or something like that. So we're just going to keep the focus on really beginner friendly, good quality stocks, and that's kind of what we're focusing on this channel. So first of all, Algonquin Power and Utilities, I'm just punching this into Google's here. This is on Google Finance. You can kind of see some basic information. The first thing you want to look at is number one, I guess we should cover, is the ticker. The ticker symbol is AQN, so make sure you're buying AQN. The price is currently at $21.94, which is about $22 Canadian, and the market cap is $13 billion worth of market cap. So this company is pretty big. You know, it basically means that this is how much money the company's worth, kind of thing. So whenever you look at a company, like the bigger the market cap, generally speaking, the better, because it's a long-term, well-established company, right? And the first thing I always look at is I like to go like, okay, let's see over time, how has the stock grown? So we're not going to really focus on like over the past month or so, but let's say over the past 6 months, we can see the stock is consistently growing on a regular basis, but looks good. If we go year to date, we can see that the stock is consistently growing. If we go over the past year, we can see that once again, the stock is pretty much for the most part consistently growing. Over the past 5 years, tons of growth with this company, as you guys can see. And if we go long term, which is since 2009 here, we can just see consistent growth with the company, a lot of it coming over the past couple years. So this basically will tell you that, hey, if you buy into this company, you're guaranteed to get growth. Now you'd have to look at the actual numbers to see how much it is, but I'll tell you that it's been very good for Algonquin and Power and Utilities. So when you're looking at a company, the longer term of history you can get, and the more growth and the more consistent growth the company has, like we've seen a few dips here and there, but for the most part, it's been pretty consistent. This to me is a very good sign, and this just shows you that, you know, this company just has a good history of growing. So that's pretty much the first thing I look for is, you know, how long has the company been around for, how much history have they have, and how much growth that they have. And the more of those things they have, the better it off. And the second thing I will look for is at the dividend yield. I'm a big fan of dividend-based companies, but I also understand that when it comes to dividend yields, you don't want stocks that have too high of a dividend yield. So you can see Algonquin has a dividend yield of about 3.6%. It's about that 3 to 4%. I think that's a pretty good range for most companies, especially good dividend-based companies. So if you want to buy good dividend-based Canadian companies, I would look for that 3 to 4%. Anything higher than that, you'd have to analyze and be like, okay, what's causing this dividend yield to be higher? Is it because the stock, there's a bit of a dip? You know, is there a pandemic going on that pushed the stock down? What's going on here? And if everything's okay, then there's nothing wrong with that. But like, always be wary of, like, if you see a stock with like a 5 or 6 or 7% dividend yield, especially if it's not like a REIT, I'd always be careful of that, because that's always a sign that maybe things aren't going well with the company, and you don't want them to cut dividends, because when companies cut dividends, you lose money. Even if they do have a higher dividend than like a lower dividend yield company, you do lose money. So I always look at a dividend yield that's kind of like that, you know, 3 to 4% range. But as we go later on in the video, I'll talk about what's even more important, which is dividend growth. But when it comes to dividend yield, that's how I just do a basic analysis. And moving into dividend growth, the more important thing, like I talked about, is not so much the yield. Yield is good if you want the income right now, but dividend growth and payout ratios are the more important things. So the dividend growth of a company is how much are they growing their dividend over time. So one of the main factors that we can look to see, like, you know, how likely is a company to grow their dividend, is to look at their previous dividend growth history, which we'll talk about in just a second. But one of the big factors is the payout ratio. So the payout ratio here, we can see here on Yahoo Finance. I just punched it in. I usually just go to Google and then type in company payout ratio, and you should get something. Sometimes some of these companies, it's a little bit hard to find information, especially Canadian-based companies, but just try your best to search, and sometimes you can find it on like the company's website, or you can go to Google, or there's some other websites you can find too. But the payout ratio we can see here for Algonquin Power and Utilities at right now is 72%. So this means that 72% of Algonquin and Power Utilities earnings are going into the dividend. So this is pretty high. Actually, now that I look at it, it's not necessarily a bad thing. You kind of want to look for companies that are in the, I would say ideally in the 40 to 50% range, but depending on how aggressive the company dividend is, like if their dividend yield is higher, this number is going to be higher, of course. You're going to get a higher amount. So we've seen that Algonquin Power and Utilities has that 3.5 to 4% dividend yield. So this is the reason why this is so high. So what I would do at this point now is look at, okay, what is this company's earnings? How are the earnings doing? You know, they have a high payout ratio, which isn't necessarily a bad thing, but it is definitely on the higher side. So I would, from here, go look at their earnings So if I go to if we go to Yahoo Finance and we go to financials, we could look at their earnings and just kind of look and see like, okay, you know what, this company has a little bit on the high side payout ratio, not necessarily bad, but it's a little bit on the high side. Let's just check their earnings to make sure we can justify having that. So if we go annually on Yahoo Finance, once again, we can see 2016 here, we see 2017, 2018, 2019. So the graph isn't quite in the best spot here. For some reason, it's in a weird spot here. But you can see here that the earnings and revenue has been, for the most part, consistently growing. And this to me would look good, right? We can see here to 2016, 2017, big earnings and revenue. Same with 2017, 2018, big jump in earnings and revenue. In 2019, they had a very good year. They're not updated with 2020 yet. Looks like there's a little bit of delay, but I mean, I'm sure you could find that information if you dug around on the internet, but this is just a quick little peek. I mean, I'm sure 2020 might be a crappy year now that you think about it, right, with the pandemic. But we can see here just steady growth throughout the company, so that looks pretty good. Quarterly, we can see like kind of the more recent stuff. So first quarter of 2020, which was basically a crap show for most companies, obviously down quite a bit, but good recovery in the second quarter. Third quarter, not too shabby, but you know, that's just kind of how the year was. So overall, I think the earnings report and the financials for Algonquin Power and Utilities on Yahoo Finance, it's pretty decent. I mean, you could go into their debt and stuff like that, and if you want to spend the time looking at it, but I think most companies, as long as you look at their earnings and their earnings are growing and their payout ratios and whatnot aren't too shabby, I think that's a good basic start to look at a dividend-based company, and that's kind of what I would do, and that's kind of how I would approach it. And of course, when it comes to dividend growth, one of the most biggest factors when it comes to dividend investing is, I think, how much is this company going to grow their dividend over time? Because if you're buying a company for the long term, like let's say 5 to 10 years or even more, which you probably should be, you want that dividend growth to really stack up over time. So as you guys can see here, I went to Seeking Alpha, which is a pretty cool company. You can see the dividend growth of companies. Here's the one for Algonquin Power and Utilities. The 1 year growth rate is at 10%. So imagine whatever the dividend yield. So if you make like $1.50 or whatever it is from your company, or you make $2 per share, that's growing by 10% over the past year. So that would be an extra 10 cents. Doesn't sound like much, but when you buy multiple shares of a company, that does stack up over time. Over the past 3 years, annual dividend growth rate of 9%, which once again is close to that 10%. Over the past 5 years, 10%. And over the past 10 years, 10%. And like honestly, like anything, the average kind of tends to be around 5%. So if a company is growing their dividend by 5% per year, that's pretty average, I would say, and pretty okay. But like if anything between 5 to 10% is like, I'd say really good, and anything higher than 10% is like really, really good. But that really only happens in a company's kind of growth years. So we can see here that Algonquin Power and Utilities has a 10% dividend growth rate per year, which is pretty good. Once again, you can see this kind of represented by this cool little graph here at the bottom. So you can just see, you know, the dividend amount was 26 cents or 27 cents in 2011, then it went up to 29, and then 31, then 33, 37, 41, 46, 50, 55, and 60. So you can think about it like this: every 10 years, your dividend is doubling. So whatever you make in dividends in 2010, by the time 2020 comes around, you've doubled that. So 10% per year is pretty good, pretty solid, and that's a pretty good dividend growth rate for Algonquin Power and Utilities. So looking at all the information, I would say that Algonquin Power and Utilities, just once again, this is just really basic analysis, and there's other things you can check, but these are just some of the simple things I check in a company. I would say that it's a good stock to buy right now. So I'm going to be putting in an order to buy about $100 worth of Algonquin Power and Utilities, be $110 here, and that's the big stock I'm going to be adding inside my portfolio today. But realistically, like once again, I want to mention, guys, that I'll just do a quick little recap here. Any stock that I hold inside my portfolio, I think, is a good stock to hold. Like as you guys can see here, all these stocks are all good quality stocks. And really, at the end of the day, I don't like to get too crazy about like, oh, should you buy this? Should you buy that? Just buy good, solid companies, and you really don't have to worry about that on a regular basis. So, anyways, I hope you guys liked that little bit. Now let's jump inside the monthly income of the portfolio, and I'll give you guys a quick little update on how our earnings have been over the past couple months. And before we end the video, guys, I just want to show you guys really quickly the dividend income of the portfolio over time. So once again, we started this portfolio in January of 2020, and over time it's just been consistently growing with the dividend income. Obviously the stock appreciation has accounted for most of the growth of the portfolio, but I do like to track the dividends because it's something that's consistent, it's guaranteed, and at the end of the day, it actually is money coming into your account. So as you guys can see here, you know, we started off pretty small, and then over time it just kept growing to the point where we recently did a video the other day about how I hit $50 a month in dividend income check it out if you guys haven't already watched it. But that basically shows, you know, how we finally got to $50 a month with dividend income. Once again, I know it's not much, but it does add up over time. And our total dividends for the portfolio since we started investing is about $300. But as you guys can see, by making $50 a month, that number is really going to start to jump up going into 2021. But anyways, guys, that's it for today's videos. I hope you guys enjoyed it. If you guys enjoyed this video, please be sure to give it a big thumbs up. Let me know what you guys think in the comments. And other than that, guys, take care. Have yourself a good day, and I'll see you guys later.